How are you guys doing? This is Ryan. Welcome back to the channel. Today we're going to be talking about why I am quitting my $26,324.98 all-weather fund that was made super popular by fund manager Ray Dalio, who's a legend in the finance community. I've had this portfolio for 3 years and it has provided decent returns, but I really believe it's time for me to move on from this portfolio. And that's not to say I dislike the philosophy, and like I said, I'm pretty happy with the gains in the portfolio. But in this video, I will jump into the reasons why it's not the best investment for me moving forward, and I'll show you the kinds of returns that I got while holding it for the last 3 years. And I use this strategy really in one of my IRAs, not my entire investing portfolio, but this strategy just doesn't fit into what I'm trying to do moving forward. So with that said, let's jump in the video. I came across Ray Dalio's all-weather fund about 4 or 5 years ago from Tony Robbins' book, Money Master the Game. And honestly, it's a terrific book. And I'll link it in the description below if you're interested in the book. It really opened my eyes to the investing world, where Tony Robbins goes through and he interviews like a dozen people all in the finance community that are all self-made billionaires, really. So you get to see the investing world through the lens of a lot of different investors. Now, prior to reading this book, I had a more fearful view towards the stock market. I didn't quite understand it. And I came out of college during the financial crisis, so there was this distrust towards the market. I'm 31 years old now, but I spent most of my younger 20s garnering my skills and starting businesses to kind of grow my money. And I knew the excess money I needed to invest so I eventually wouldn't have to work forever. I spent a couple years acquiring precious metals and I wasn't happy with the returns I was getting from that. So the Tony Robbins book really opened my mind. And the golden nugget in the book was Ray Dalio's all-weather fund. It was this fund that could historically return you really solid returns with very low volatility. I believe if you backtrack the fund's performance for 85 years, it actually only lost money in 4 years or something ridiculous like that.
Because here's what I did. I went to people like Ray Dalio. Ray Dalio, most average people never heard of, but the president knows him, Janet Yellen, the head of the Fed knows him. He manages money for China, for countries, $160 billion. I sat down for 3 hours. I said to him, look, normally it takes $5 billion to be able to invest with him. About 10 years ago, and you had to give him $100 million. I said, if you couldn't give any of your money to your children, all you could give them was a strategy, because I'm looking for something that I could give to everybody else, a plan that they could start with little or nothing and they could truly be financially free and they wouldn't have to go those ups and downs that make people freak out. He said, I know exactly what I do. It's called my all-weather fund. He said, I do it for, my own money is in that place. My money for the future is in that place for my kids. Explain it to me. Explains it to me. At the end I said, this is brilliant. It's made money since 1925 like clockwork. Most it's ever lost is tiny amounts of money. Makes money like crazy. I said, this is wonderful, except you've told me make a chocolate cake, and you said use some sugar, use some chocolate, use some flour. I need the amounts, the secret sauce, right? He goes, Tony, I can't do that. You know, that's my secrets. I said, I know, but you said you're not taking any investors. You haven't for 10 years. He's giving away half his net worth, one of the most generous men you can imagine. At the end, I got him to give it to me. He's never shared it ever. It's in the book.
It's in the book.
And here's what it does. You can take 15 minutes a year. No, nothing else. Just do that plan. You can implement it yourself, or you can have someone do it for you. But here's what's worked. In 75 years, it's been right 85% of the time. And when it's been wrong, it lost 1.6% on average. In 70, you know, the ups and downs, last 10 years, we had 50% ups and downs, so it wipes people out. If you could go to Vegas and you could be right 85% of the time, and when you lost 1.6, and when you won, you averaged 10%, you do that all day long. That's what Ray has given it.
So the volatility in the market can really shake off a lot of beginner investors. So for me as a beginning investor, I really found a lot of value in that. But the more I matured, the more volatility in the market was actually a greater opportunity. So I don't mind watching investments fall by 20, 30% or something ridiculous like that, which in the all-weather fund, that never has happened. The fund is structured in this way. It wants 40% weight into long-term treasury bonds. So I own the ticker symbol TLT, which is 40% of the entire portfolio. And then 15% is into shorter term bonds. I own ticker symbol IEF. And then it puts 30% into stocks. So I own VTI, which is a very popular ETF to own. And then it recommends 7.5% in gold. So I own GLD. And then another 7.5% into a commodity basket. So I own ticker symbol DBC. So as the year is going on, I want to max out this IRA, and the fund is suggesting that I'm underweight in bonds right now, and I really can't stomach myself to buy bonds right now. Even though the TLT, for example, has performed really well. I'm actually up 23% on TLT year to date. But the reason because that is because interest rates are so cheap right now, and I own these bonds from previously, so these bonds have a higher yield. People are more willing to pay money for my bonds because they have a higher yield than bonds you can get on the market today. So I just can't look myself in the mirror and buy bonds right now. I can't do it. And then you look at commodities and you look at gold and things like that. And this money is in a tax sheltered account. I'm 31 years old. I can't really access this money for another 29 years. Even if the stock market seems expensive right now, I can say with a high level of confidence, I think the stock market will be much, much higher in 29 years. Let me know what you think down in the comment section if you think stocks will be higher or lower in 29 years. And what do you think will best perform in this fund in 29 years? Do you think it'll be bonds? Do you think it'll be gold? Do you think it'll be a commodity basket? I am most willing to bet on the stock market. And I actually find having a fund that has low volatility in it, it makes me less likely to invest in it. When I see a good investment go down a lot, I want to buy a lot more. But then another question I want to address about this IRA is I only intend to own ETFs in it. The idea of managing a fund and buying individual stocks for the next 29 years kind of feels exhausting. I'd rather put it into something like VTI or VU, or even something like QQQ, which tracks a lot of the top holdings in the NASDAQ and is more tech focused. And as we've seen over the last 10 years, that tech has really just been super disruptive and had tremendous returns. And it's kind of hard to look out in the next 29 years and say, what is gonna be the best performing asset in 29 years. But if I had to bet now, I would say tech, but I could just own VTI and have tech stocks and a bunch of other sectors in there as well. But I am tempted to put some QQQ in this IRA. Now, if we talk about the market today, yeah, it's a little pricey, and I hope we continue to get more sell-offs because that would present a great opportunity where I could actually sell my bonds and I could put a lot of that money into the stock market, and I could put a lot of that money into a fund like VTI or QQQ. But to be fair, I wanna show you the returns that the all-weather fund has been able to give me since I've had it. So for example, year to date this year, the all-weather fund has returned me 13%, actually to be specific, 13.01%. When compared to the S&P 500, that has only returned 5.34%. So year to date, I've nearly done 3 times better with the all-weather fund. But we need to look a little bit closer at it. If we look at the 3-year returns, the S&P 500 has actually returned 44.15% over that time frame, and my all-weather fund has only returned 32.59%. So I made 12% less over the last 3 years. That's opportunity cost that I don't want to lose on, and I feel like I'm more likely to lose on a lot more money over time if I don't make this adjustment sooner than later. I could see myself adopting this type of portfolio maybe when I get a lot older and have a much larger net worth, and I don't want to see that net worth drop by 50% or something. But for now, I'm relatively young and I need to use my youth as a tool to grow my wealth, because compounding interest is the 8th wonder of the world, according to Albert Einstein. So if you guys are thinking about investing in the all-weather fund, I hope you found this video helpful. Now, I really appreciate it if you give it a thumbs up and subscribe to the channel and turn on that notification bell so YouTube will notify you every time I upload a video here on YouTube, which is every Sunday. And also, I like to give a disclaimer, this is not financial advice. This is just me documenting my own experience in investing here on YouTube for fun and entertainment purposes. And I actually feel like it makes me a better investor because I sit down and I write myself notes and I go over everything, and I have to sit down and do it once a week because I commit to 1 video a week. And I've also met a great community of other investors, so I really enjoy doing it, and I hope you guys come along for the journey. And also, if you want to follow me on Instagram, I'll post my handle here. I post there pretty much daily. I'll share my thoughts on the stock market for the day, or something I'm buying, or just other silly things I have going on in my life. But that's all I got for today, so I'll see you guys in my next one.